I wanted to tackle for today before we get into chapter 4, the lecture. Actually, you might not need the lecture, but the thing is, I think we can practice already with the content of chapter 4, as in recording or doing financial statements from the document up to the financial statement. We can do a little bit of that if we work on the problems. So when you came in, I already have in the shared screen the problem 1-1. So as of December 31, Charles' company had 12,000 in cash, held 95,000 in inventory, and owned other items that originally cost 13,000. Other items, we can just say asset is the account. We can just call them other items. Charles' company also had borrowed 40,000 from First City Bank. Prepare a balance sheet for Charles' company as of December 31. So this is a practical application of what we have discussed in the previous previous lectures. So I will start with the heading. So the heading starts with Charles' company. RM, can you read this? So we can just say balance sheet or statement of financial position. Let's just say balance sheet for the year ended. Is that year? For the as of December 31. For the year, let's just say ended December 31, 2020, say 23. So the first thing we will just do, we cannot do it side by side because of the lack of space, or probably we can do it. We can just say this is asset. This is liabilities and owner's equity. So this is very easy. The cash under asset, we will not classify them really because this is a very simple company. The cash is 12,000. Inventory, it is under asset because it's something that is useful. You can actually sell it. You can manufacture it further. So they said 95,000. And then they owned. So which means this is a possession. This is an asset. We can just call them other items. Not so familiar in accounting, but since this is just simply an exercise, we can put other items or others. We can just say others. We can say miscellaneous, 13,000. And then there is a borrowing. So it's loan payable. It can be note payable. It didn't mention that there's a note, but we can just say loan payable to Citibank. Loans payable, let's just say FCB. 40,000. Prepare a balance sheet. So basically, if this is all, how much is this? Total asset will therefore be 7, 10, 9, 10, 11, 12, 120. So which means that here, the name is Charles Company. We can just say this is capital or owner's equity. Let's just say owner's equity. If it's 120 here, can you guess how much is the capital? So how much is the capital? You can actually put something in the chat, okay? So I think it's better here if you put in the chat because the internet connection probably might be delaying your answer. You're putting your audio on. Okay, so the balance is 80,000, correct? Correct, RM. So this is total, we can just say total liabilities and owner's equity. Here, total asset. In the exam, don't say total A. This is only from the professor because I know accounting. But you are trying to learn accounting, so don't give me total A, but total assets. And you know, double rule is very important, meaning double rule, tapos ang storya, done. Yeah, nothing to change there, both equal. Okay, do you find it easy? Any question? So again, very important, name of the company, name of the statement, and if it's a balance sheet for the year ended. Sorry, it should be for the, that's wrong. It's really just December 31. Again, this is a snapshot as of December 2023. Sometimes it's better, we don't know the year, probably this is 1900s, time of your grandparents, XX. Okay, any question? What did you see? What did you think of that? Easy? Is that easy? Okay, okay lang po. Very good. So now let's, you can look into your assignments. We will do the assignment. You can see if you have it correct. I will share it first. Okay, so I will read it aloud. Selected balance sheet items are shown for the Microtech company. Compute the missing amounts for each of the 4 years. What basic accounting equation did you apply in making your calculations? So you will see here. So basically, this is a very simple financial statement, all broad categories: current asset, non-current asset, total asset. When it comes to liabilities and owner's equity, current liabilities, non-current liabilities, paid-in capital, retained earnings. So this is a corporation, a company, incorporated. So this is Microtech company, okay? So how did you actually find the solution? Very simple, using your calculator. If here, the question mark is a non-current asset, but you have the total and you have one of it, one of the items. So basically, 524,600 minus 113,624. Okay, I will not answer it now. Probably you can answer it. And here, because there's only one missing item, see that this balances 524,600 total asset, 524,600 total liability. So the question in this lower portion is the non-current liability. So very simple, using the calculator, this total minus all of these items is equal to this one. Agree? Okay. Now, the thing here is we don't actually know in year number 2, the question mark is actually 2, the total and one of the items. How do you know what to use? Anyone would like to answer this? How would you know? Very simple, because total asset is equal to total liability. So you get the total liabilities, 288,456, and you put it here. So now, here below, you have something that is missing here. So is it the same as what I did here in year 1, wherein the total liabilities and owner's equity, I just deducted from that current liabilities, paid-in capital, and retained earnings? The answer is no. Why? Because the retained earnings is a negative. It cannot be 288,456 minus this one, minus this one, minus this one. Why? Because this is a negative. Okay, so basically you have to would be added. Okay, and you can always double check. Okay, so can you do it with a calculator with me? What would be the answer? Because we are not deducting 3644. So I start with total liabilities, 288,456 minus 4220. 288,456 minus 4220 of liabilities minus 173,295 plus I would add 3644. No. Would that be 78,585? Anyone who tried it?
Yes po.
So it's 78,585. And the good thing about accounting is you can double check. If it's 78,585 plus current liabilities of 40,220 plus paid in capital, I hope you're following me, 173,295 minus retained earnings is not positive. It could have been a net loss for the entire year, including eating up the retained earnings of the previous years. So minus 3644. Correct. The answer is 288,456. So this is different from year one, wherein the total, you deduct only the items, you get this one. Very different because this is a negative. Gets? Okay, thank you, Zach. So now, will this be easier? Hold on. Again, this is, no, this one, year 3, is a bit more complicated. Why? Because there are no totals. But it's so easy in a sense because you can just add current asset less non-current liabilities, you get the total asset. And since you have the total asset, you put that in the total liabilities and equity. So here below, in this one, in this equation, this is easy also because since you already have the total liabilities and equity based on what you got here, you can just minus 1,452 minus 170,000 minus 60,100. Okay? Very easy, isn't it? Accounting is very easy. Next, year 4. Very easy also because you have the total asset. So to get current asset, you just deduct 151,021. And then also easy because there is just one missing item. So I think you might, once you are afraid of accounting, you see this and you might get afraid only of this year 3 because you don't have totals. So you go for the ECS, which is the top portion because they have the 2 items already. You just have to add. And this thing could be the 3644 negative retained earnings could be ang tawag dyan, could have been a loss already. Okay, so instead of deducting like this one, you add it. You add it, meaning 288,456 minus 4220 minus 173,295 plus 3644. Okay? So no questions with 1-1 and which is not asked in the assignment, but only 1-2. So now let's go to 1-3, problem 1-3. Selected income statement items are shown for Astrotech company. Selected. Okay, so I think this is what you call super, this is like summarized already. Compute the missing amounts for each of the 4 years. What basic accounting equation did you apply in making your calculation? The hint is, to estimate the year 4 missing numbers, compute the typical percentage each expense item is of sales for years 1 and 3 and apply the percentage figures for each expense item to year 4 sales. Isn't that so difficult to understand? Okay, we will try to go back to this parenthesis when we get to year 4. But how easy this is, let us try to use the whiteboard. So I am now in year 1. So sales less cost of goods sold. What is that? Yeah, so this is a manufacturing company. The cost of the items you have sold for a profit is this 3,011. Yeah, so you have sold $12,011. The cost of that is 3,011. This is highly profitable. Meaning, I think this is like 70% gross margin. We will see. Gross margin is 7, 9, 9, 10, 11, 12, 9,000. Okay. So what is that percentage? I am advancing it because I already realized, wow, imagine the cost is only 3,000 and they sold that cost of 3,000 for 12,000. So how do you compute how much is this? Using the percentage, 9,011 divided by 12,011. Okay, put your answers in the chat if you can, so you can be working with me. 9,011 divided by 12,011. This is 75%, almost. Did I say 70% earlier? So this is 75%. 75%. Again, this is the computation. What percentage is gross margin? So basically, this is like, in a sense, a good business because your cost is only 30%. But this is only the cost of goods sold. We haven't removed operating expenses, which could be, as I told you, if you are selling a bag, you bought a bag in Amazon for 6,000 pesos locally, for example, the computation of that. And then you sold it for 12,000, more than 12,000. Okay, so which means that you have a highly, in a sense, profitable, people really buy, even if that amount, but probably because they find that it will be more expensive to order from Amazon and have it shipped here. So I can just pay the extra amount to this seller. So gross margin is 9,000. So other expenses is 6,021. Okay, not using the calculator. 0, 9. This is 9. This is 8. Tama ba for all of you using the calculator? Raised hand.
For the gross margin, hindi po dapat 9,000 po yung answer.
Okay, teka, hold on. Gross margin, tama ka dyan, 0. Yes. So the percentage, will that matter so much? Can you compute the percentage? Gross margin percentage?
It's the same, Doc.
68?
75 pa rin po, Doc. It's the same.
75. Okay, very good. Okay, and then the other expenses, this will be profit, but hold on, it's not totally yours, profit before tax, because you have to share it to the government. No matter how good the government, how bad the government is, you have to share it, okay? Profit before tax. We don't know, but the net income, net of everything, try to think of it as really a net, okay? If the holes are big, so many things will fall out of the net, but you make the net a little bit like really refined so that not so many things will fall out. So it's the same, like you try to save on expenses so that not all of the money will come out as expenses. You still will be able to retain much of your sales. So the net income is 1,679. Mali nga. Okay, so this is 9 minus 2, 7, 9, 8. Mali pa rin. Saan ba ako nagkamali? Here is, tama naman, gross margin is 9,000 minus 6,201. What a difference, no? With transposing some numbers. So 9, this is going to be 9. And this is going to be 9 minus 2, 7. So compute the taxes. So this is 0. This is 2. This is 1. This is 1. Okay. 9,972. Correct? Okay. So now, let us compute for year 2. Is that going to be easy to compute? Yes, because they had the cost of goods sold of 2,992, and the gross margin is computed for you 8,976. So basically it's 816 plus 1, 9. And then, okay, I need some brains here. This is 8, 16 plus 1, 19, 1, 5. But wrong. This should be higher. Okay, let's use the calculator now. I will just have to add this. 8, 16 plus 1, 19 plus 1. Tama ba? 10, 11.
Yes, Dong.
11,968. Thank you, Jillian. Okay, so deduct the expenses of 6,429. So that is the question mark here. 16 is 7, 6 minus 2 is 4, 9 minus 4 is 5, 2, 5. Just tell me if I make a mistake. Then minus, this is given 1,019, 17, 6, 3 minus 1, 2, 5, 1. Okay, very good. Remember double rule. Okay, you have to be like accountants. Okay, good so far? So we are not yet into the hint of estimating year 4 missing numbers. Okay, 1, 5, 2, 8, 17. You are right. Thank you. 17 minus 9 would be 8. Okay, so year 3, 11, 545. I suppose you are not getting in the, you are not, because I have my meeting chat here open. So you just give me the answers. 11, 545. This is the question mark, the cost of goods sold. And you have 8, 6, 15, 9. Okay. So this could be 4. My brains are not working right now. 2886. Where did you say 2886? What is 2886?
For the ano
Gabby?
po, CGS po ng year 3.
2886. 15, 1. This is 9, 14, 1. Tama. Okay? 8659. This is a question mark, but that is easy. Why? Because you have 2, 3, 63. What is the answer? Minus 945. This should give you 1418. 1316, 131. Okay, so the answer 6296. Okay, very good. This is good teamwork. Now let's go to year 4. How did you solve that? So in this part, we have to understand well the instruction. To estimate the year 4 missing numbers, compute the typical percentage each expense item is of sales for years 1 to 3. So when they say each expense item of sales, no, everything, this is the denominator when you have to compute. Okay, so it's basically saying let us compute the cost structure. So how much is cost of goods? We mentioned earlier something like 78%. Okay, so here in year 1, cost of goods sold is 3011 divided by always the denominator is the sales, 12,011. So this is 25%. Okay, and with that, this is 75%. Okay, what about other expenses? Other expenses is in year 1, 6,201 divided by, again, denominator should be 12,011. So 6,201 divided by 12,011, 52%. Okay. What about taxes? You have 1,120 of tax divided by the denominator always is sales. Why? Because there's an instruction. You have to get each expense item. What is that of sales? This is 9%. Okay. So let us see. Add 25, 52, and 9. But actually, we are missing the profit. What is the net income? What is that in terms of percentage of sales? So net income in year 1 of 1,679 divided by 12,011 is 14%. I should get another color. If you can, now I will stop share because we have the answers here. Okay, so it's 25 plus, they have to be 100%. Okay, 25 plus, you don't see it, it's actually 52%. Other expenses, 9 of taxes, 14%, 100%. Tama, 100%. And what is the 100%? Is the sales. Okay, so knowing the, you call that the cost structure. For every peso I get in sales, this is the simplest way to explain it. For every 100 pesos, 100 na lang. We can say 1 peso. For every 1 peso or every $1 of sales, 25 cents go to cost of goods sold. Like you spend it for the cost of whatever you sell. 25 cents go to that. For the other expenses, 50 cents, 52 cents. For your taxes, 9 cents. For your net income, 14 cents. Is it worth doing business with that? But at least if you do business, you still get 14 cents for every peso. We're just talking about $12,000 of sales. What if you come up with 1 million of sales? Is it worth it? Is it worth doing the business? For sure, because you have for every peso, for every dollar, you have 14 cents. You get it? That's how you would think of the business. So knowing that, can you actually compute already for can you actually compute year 4? Any volunteer? How do you compute for sales, first of all? Okay, so knowing that, if you start with 10,000, I will stop share. Using the Excel could be plus or minus, whatever, but this is like we're rounding to the nearest how do you call that? Nearest dollar. So we can just say this is 25. This is 7,500. This is 5,200. Where am I getting the figures? Basically, the percentage. 25% of 10,000 is 2,500. If the operating and then gross margin is always the it's always the net. Okay, net of cost of goods sold, sales minus cost of goods sold. Operating expenses, we found out, is 52%. For every peso, 52 cents. For every dollar, 52 cents go to operating expenses. So we will assume 5,200. 52% of 10,000 is 5,200. So here should be 2,300. And then I think the taxes is not always 9%. You don't actually, can you compute please 1,120? What is this of this? Is it like 40%? Because the taxes are not computed on the basis of sales. It's really on the basis of the profit before tax. Okay, Can you compute if there is an existing is this a similar percentage of the profit before tax? Because here, if I put, you can say 9%, the profit is 1,400. Can you actually see if this is like a similar percentage of the profit before tax? Let us see.
Yes po, it has a pattern po ng
Like a
40%.
tax 35%, is it? Let me see.
40%.
1,120 divided by 2,799, 40%. So that is like the tax rate. 40% of the profit goes to taxes. So almost 40%. Let's see, in the last 900 divided by 2, 40%. Okay, so that's something that you learn. Again, before I mentioned the highest before, like when I was earning compensation income, 32% of my salary goes to the government. Okay, hopefully it goes down to services, right? It doesn't go to Coldplay concerts and helicopters. Okay. Next, any question with that? What can you say after all of this? Is accounting a little bit easier, a little bit manageable to understand? Is it? A little bit. Okay, very good. Tama, pattern recognition. Tama ka dyan, Bella. And helpful, hopefully, because you get to, the thing here is familiarization. Okay? A little bit of memorization, but there's really a logic to it. Like, this is so logical. Sales is not profit. Sales is not profit. For example, you hear the YouTubers saying they get millions from YouTube, but they have to deduct their cinematographer, their computer, everything. What is the profit? That is the interesting thing, because they show their houses, they show their cars because of YouTube. But how much did they loan from the bank? How much is the interest expense? Like, don't always believe them, okay? So hopefully with this, you realize that the sales is very important, but you also have to see how much are your costs of doing business. Okay? So for the ones who are in YouTube, I'm in YouTube, but the thing is, I don't believe that you can actually get a house right away because of YouTube income, unless you're like Mr. Beast, who has like how many, 1 million or more than 15 million, I don't know, subscribers, no? But even the mother of Mr. Beast, one of the, I have to check the number of subscribers of Mr. Beast, but even the mother was already complaining because really, there's really hardly anything that retains in the business, because at the same time, he spends it for many of this, like to say he would pay, or he would give away a laptop to whoever. So that's expense. Yeah, that's expense. Where is that coming from? From the YouTube income. So in the end, how much is the gross income less the cost of running the YouTube business? And then you have to pay taxes. Yeah. The operating expense, perhaps the mother of Mr. Beast is not charging money, perhaps she is. So that's part of the operating expenses, the pay. Okay, so I think with this, learning accounting makes you a little bit less, a little bit more questioning when you see, okay, so much money, but actually it's gross, meaning the gross amount. They have not deducted their expenses yet. You get it? Okay, now let's go to, what did we say? Did we say as the assignment is 1-4, 1-5. Okay. 1-3. Okay, 1-4. An analysis of the transactions made by Acme Consulting for the month of July is shown below. So here, instead of what we have earlier in the first problem, cash there above and then liabilities here, this is not a financial statement. This is like a worksheet. So you have there at the top, actually the equation. Asset is equal to liabilities and owner's equity. Asset consists of cash, accounts receivable, supplies, inventory, equipment. So both current and non-current, which is the equipment. And then liabilities and owner's equity, the right side of the equation, consists of accounts payable, owner's equity. What is this last thing? Description. Basically, it's just telling you if you were the owner of the company and then you want to see the Excel file of each transaction and you don't have an accountant and your bookkeeper is actually doing this kind of accounting for it. So there's a description for every transaction. So the first line says, positive plus 20,000 for cash plus owner's equity. The description is investment. So this is like a very trite way of saying it. But normally, if I'm the accountant, I would describe it as follows. The owner invested 20,000 cash in the business, also known as investment. You get it? Next. Sorry. Before I just explaining the worksheet, but it is very important before you solve anything, go to the requirement. So explain each transaction. I actually explained the first thing. Okay. And then spend a few minutes trying to see and trying to put your answers so that you can always validate with whatever I say later on. So basically explain each transaction, list the changes in the company's balance sheet during the month of July. So we will do a balance sheet. Prepare an income statement for the month, ignore taxes, explain the changes in the cash account. So we will just look at the left side, the leftmost, and then explain why the change in the cash account and the month's income are not the same. Okay, so spend a little time, and if you cannot remember this problem, try to answer it right now. I'm giving you 2 minutes. Again, I'm checking. I always forget. So this is 1-4, and we will still do 1-5. 1-4, 1-5. Okay, good. Okay, I want to show you something. Sometimes we buy something. This is giving you some tips about buying anything. You can see that my whiteboard, there are those traces. As many times I still have to clean it with sanitizer and rub because I think it's in the pen that I use. It could be cheap, but then the thing is, even if it's cheap, I say, okay, I'm going to buy because it's cheap, but I spend, say, 30 minutes of my time. And if I know my hourly rate times 30%, I already know that there's this additional expense because I have to clean my whiteboard. Okay, so when you spend something, like, don't say it's cheap because, like, somebody told me, okay, I buy my eyeglasses from Quiapo. And then she spends the whole day going to Quiapo, the whole day waiting for it there, coming back, and then going back to Quiapo to get it. So how much is your transportation and how much is your pay equivalent hourly rate to go to Quiapo to get that cheap one? Whereas you can go to the nearby store, it could be a little bit more expensive. But if you compare everything, don't just think of that particular amount of the eyeglasses. You have to put everything, and you can already see where is it going to be more expensive. But somebody will say, yeah, I just like to go to Quiapo. Okay, that's your problem, right? You get it? Like, this is really accounting for your time, accounting for all your expenses. Don't just see, okay, everything is like it's expensive there if I buy it in the mall. Okay. So here, so we are in letter A, explain each transaction. Number 2, there is no description here, but we can say this is reduced cash is reduced by 5,000. Equipment has an additional 7,000. Accounts payable is 2,000. Is there an equality here? Yes, left side is net of 2,000. Positive, still positive. 7,000 plus minus 5,000 is positive 2,000 is equal to accounts payable of 2,000. So what does it say here? Probably you bought, we probably can just say, purchase equipment for 5,000 cash, balance payable in 30 days. Or you can just say 2,000 on credit because we don't have chismis already. This is chismis if I say balance payable in 30 days because I don't have any data. Okay, that's rumor already. So we can just say here, how do you describe the transaction? It's purchase equipment, paying cash of 5,000 and the balance of 2,000 on credit. Okay? Did you get that description? Any question with my description? Sometimes, how do you say that? Nag-assume tayo so much. When I say payable in 30 days, nothing. There's nothing here. So accounting can actually minimize your presuppositions in life, okay? Number 3, negative 1,000 supplies inventory plus 1,000. Very easy. Purchase supplies for 1,000 cash. Or you don't have to say for 1,000 because the description actually looks at the amount already. So we can just say description as an accountant. Purchase supplies for cash. Okay. Number 3, negative 4,500 in cash, negative owner's equity, and you can say salaries. The owners get salaries. Yeah, they can agree. If this is like partnership, they can agree. Okay, let's start a business. And every month, we really have to work hard. And every month, if there's a profit, we can just get salaries out of that profit. It's not, we can pay ourselves. They will decide. We can pay ourselves salary. So with this one, probably you can say all the people, like 1,000. If there are 3 partners, each one getting a salary of 1,500. Okay, so the description, salaries like investment is super short, right? We can say a more descriptive one would be paid the owners, pay the 3 owners the salaries. Okay, 3 owners is a presupposition of mine, is an assumption of mine. We can just say paid the owners their salaries. Number 5, plus 5,000 plus accounts receivable of 5,000. And then the equivalent in the right side is 10,000 owner's equity. So it says here revenues. Okay, now that I understand a little, let's go back to number 4. It's possible that the thing of the owner's equity is that it becomes like a basket of all the revenues and expenses. So I made wrong assumption here. It's actually an expense. So paid salaries, payment of salaries in cash. Okay, so it's not, I assume it's for the owners because I got so confused with the owner's equity. But here is basically a basket for all revenues and expenses, meaning dumping site. Number 6, minus. So here we can say that earned sold goods or revenues earned or sold goods for half cash and the rest by credit. It's not our credit, it's the customers buying it by credit. Number 6, minus 1,500, accounts payable minus 1,500, no description. The bookkeeper, I will assume, got lazy, so that's an assumption. But basically, this is for us to answer, fill in the blanks. We can say paid accounts payable is a bit like repetitive. Paid the suppliers, 1,500. What are the suppliers? These are the ones who are lending you somehow the goods already. You can get them even if you have not paid for them. So these are your suppliers. The ones here are your customers who purchase your items without paying for them yet. So they got the goods from us on credit. Okay, don't get this. Try to think of it this way. If these are accounts payable, it's your suppliers giving you credit. So basically, number 6, paid your creditors, paid your suppliers, 1,500 cash. And the number 7, all the items happen in the left side, plus 1,000 minus 1,000 accounts receivable. A customer, you can say customer or a customer or customers in general paid 1,000. Okay, number 8 minus 750 here, minus 750. So this is the rent, paid rent. Okay, number 9 minus 500, minus 500 utilities can be electricity, water. What else would fall under? So that's water. There's another one, telephone bills. So utilities can be electricity, water, telephone. So number 9 minus 500 here, the equivalent minus 500, that's the utilities. Number 10, everything happens in the right side, plus accounts payable minus 200. So basically you booked a flight. So this is travel. So we can say that it's possible travel could be it's a plane fare, it's a bus trip, no, but on credit. Okay, so that your accounts payable increase. So that's number 10. Number 11, supplies is a deduction of 200, and there's a minus owner's equity. So basically, this is an expense because it is a deduction in owner's equity. Again, this is a dumping site. Yeah, owner's equity is increased by capital investment of the owner. It's also increased by revenues. Revenues here, 10,000. It is decreased by expenses. So what is this 200? What could it be? Because there is an equivalent deduction in supplies inventory, we can say that this is a cost of goods sold. No, the supplies have been sold. Okay, supplies inventory, deduction in inventory, it becomes an expense because here it is an asset. So if you reduce the left side, reduce the asset, then you have increased your expenses. Okay, any question with that? So that is how we explain each transaction, hopefully with less presuppositions, less assumptions that are unfounded. Okay, so B, list the changes in the company's balance sheet during the month of July. So how all of these changes, basically you have to, the balance sheet during the month of July, prepare the income statement. So let's see if it will balance. So you have that, hopefully you have it before you. I will stop share, but I will be able to see this. So the first thing that we have to do before I stop share, the balance sheet, and then income statement, nothing about the taxes, explain the changes in the cash account. I think we did that earlier. So D is already done. Explain the changes unless you answered something else or you found something in the internet. There's a solution to that. Explain the changes and why. Okay, we will answer E. So stop share. You can still see this. So basically we have the name of the company is Acme Consulting. Balance sheet. This July, as of July 31, 2000. So we start with assets here, liabilities, and owner's equity here. So the assets here are cash, accounts receivable, AR, I would say, but you should always put it, you have to be familiar with it, accounts receivable, supplies inventory, equipment. So total, and then here, accounts payable, and then already owner's equity. So we can start with, say, owner's equity in the beginning, capital, yeah. How do you call that? Paid in capital. It did not mention, but it just says owner's equity. We can just say beginning. It starts with 20,000. And then, I suppose, just looking at it, 10,000 was the revenue minus the salaries. I think there has been a net income here. So add net income. Can you please add up everything and tell me in the chat? And then afterwards, this is capital ending. So there's only one rule. Why? Because I'm still going to get the total of the accounts payable, so that total liabilities plus owner's equity will be this one, and then I will double rule. Gets? So please answer. You have to answer in the chat, okay? So give me the, can you add up? Just simply use the calculator, add the cash, add each of the column. I already have for accounts receivable, 4,000. For the supplies, 800. For the equipment, 7,000. Okay. Accounts payable plus 2 minus 500, 500 plus 200, 700. Okay, can I see in the chat if you are replying? Okay, 12,750. So therefore, total would be 57, 15, 1, 4, 5, 6, 7, 14, 1. Right? Thank you, Gabi, 24,550. Thank you, Kai, for the cash of 12,750. So basically, this should be 24,550. You have to find out the net income. So basically, this should be, capital ending should be 24,550 minus 700. This is our balancing figure. We will see. This is our checking figure. Okay. 24,550 minus 700. 23,850. And therefore, the net income is 3,850. This is like magic. Did you try to, did it coincide with the salaries, revenues? So basically, the revenue was 10,000. The salaries, let's add all the expenses. 4,500 plus 750 rent plus 500 utilities plus 200 travel plus supplies expense of 200, 6,150 minus 6,150. So 10,000 revenues minus 6,150 is 3,850. Yay! Balanced. Gets? Did you get it? So this net income, basically we work back. We just have to add all of the columns. So you mentioned to me is 12,750. So after getting that, I totaled it. And because assets should be equal to liabilities plus owner's equity, I put it here, waiting for somehow additional, this one. So we already have accounts payable because of the column total. So we just simply have to get capital ending. And then we deduce that because it's the beginning of 20, ending of 23,850, therefore net income should be 3,850. And then we checked it with the balance. We checked it with here, revenues minus the expenses. Okay. So those are the changes in the company's balance sheet. This time, prepare the income statement. Can you still actually see? So it should be here. Okay, so it's Acme Consulting, income statement. This time, did I mention if it's a balance sheet, it's a snapshot. So it's as of a date, like you take a photo of a business, it's as of a date, as of a moment. But then the income statement is how much have you generated within a period of time. So this is for the month ended July 31, 20XX. So the revenue that they, the account that they use is revenues less. Let's start with, actually with the expenses, you can make it by order of the amount, okay? Salaries. So revenues is 10,000. Sorry, I keep forgetting the first figure should have, the first figure in the category should have the currency sign. So this is 10,000. And then, because there is no space, I could have put it in this column. But if we are going to put it in one column, just put a line with the under the revenue amount. Salaries is 4,500. The next highest figure is rent. 750 is not by alphabetical order, it's by the amount normally. Utilities, 500. Travel, 200. Supplies, 200. Okay, so this is 49. Sorry. There is a 5 here. 9, 16, 11, 20, 6,150. So that's the total expenses. So all these ones that are single rule, you have to reduce because I say less. So this is, how do you call this? This is income before tax, but we are not going to assume anything income. We just say net income already. 3,850. Okay. Is that handwriting possible to put in YouTube? You will understand it. Very bad handwriting of Dr. Caparas. Okay. So you see that the net income here should be the same as here. Anything else? Nothing else. The ones that should be equal should be here. Okay. Now let's ask. Explain the changes in the cash account. I think we have explained it. Explain why the change in the cash account and the month's income are not the same. Okay, so we have the total cash of 12,750, but like typical, if somebody does not know accounting, it would say, how come I have cash of 12,000 and yet my income is only 3,850? Why? Because cash, what affects cash is not just the revenues and expenses. What affects cash would be investment by the owner. He invested in cash. And so the investment of the owner, no, actually made it really a huge amount. But then, where did we spend it? How come it's not the same? We will be able to tackle this under the statement of changes in the statement of cash flow. Okay, wherein we will start with the net income, and the ending is really the cash. So basically, we are explaining that some items in the income does not really affect the cash. Okay, so I will not advance that here. But basically, there are many transactions that did not involve cash. Yeah, like customers on credit. We were able to get this on credit. So basically, our money was not touched because we got some goods on credit. Okay. So number 5, we have during the month of June, Bon Voyage Travel recorded the following transactions. So 1 to 10, what is required is prepare an analysis of the month's transactions using the same tabular format as shown in problem 1-4, ignore taxes. Explain how the transactions during the month changed the basic accounting equation for the company. Prepare the income statement, explain the changes in the cash account, explain why so it's very, very similar, except that we have to put it in tabular form. Okay, would you like to do that first of all in 2 minutes while I erase the board? Okay, so let's see the different accounts that we will put, like the column titles. Number 1, owners invested 25, seems similar, okay? And then there's a rent as an expense, but it is prepaid in cash, and therefore a prepaid expense is still an asset, okay? Equipment, that's in the left side. Office supplies, inventory, that's left side. Advertising is an expense. So like 1-4, we will not create a column per expense. We'll just put it again like in a basket under owner's equity. And then salaries, travel commissions. So this is Bon Voyage travel. So there are commissions. Probably you sold some tickets for this airline, so you get commission. So basically that's a revenue. Equipment paid the supplier of the equipment. Office supplies, charge miscellaneous. Okay, so let's do this. So basically I think so you have cash. So I think there is equipment. Let's just say here asset, here is liabilities plus owner's equity. So let's just put the column titles as we go along. So number 1, owners invested 25 in cash to start the business. They received common stock. Okay, so there is an additional account that we will learn here. This is common stock. So common stock, this is a corporation. Did I mention that the common stock should be the same as what is in the certificate? Any extra or less than that should be affecting paid in capital. That's the account. But here it says the 25,000 in cash. So we start with cash. Number 1 plus 25,000. Common stock plus 25,000. Number 2, the month's rent of 500 was prepaid in cash. So this is a prepaid rent. $500 less 500. There is nothing that affects here, minus 500 plus 500. What is again prepaid rent? If, for example, you are going to rent a condo, you have to put 2 months of deposit, okay? And that deposit you will still get when you somehow in the last 2 years, two months of stay, you can still make use of that. So at the moment, right now, when you're starting, it is an asset. You have a claim to get it back, not really get it back, but it will be used in the last months of your stay in that condo. So it is an asset. The month's rent, okay. Here is not exactly the deposit. It's really like you start renting it beginning of the month, but you already pay it in cash. So it is a prepaid. It is an it's either you put it already as an expense or you put it as a prepaid. I would make it an asset here right now. Equipment costing 8,000 was bought on credit. So equipment bought on credit. So we have accounts payable. So that's number 3. 8,000. There is an added 8,000 here. There is an added 8,000 here. Balance, okay? Plus here, plus here. Number 4, 500 was paid for office supplies. So actually, I could have put here supplies, but let's just put it here. 500 minus 500. Did it say cash was used? Cash 500, cash was paid for office supplies. Minus here, plus here. Number 5, advertising costing 750 was paid for in cash, 750. Paid for in cash, 750. Again, we have a basket here. Let's not touch this. Let's just say retained income and expense summary. I can just say, okay, let's just put it income expense summary. Minus 750. So this is minus 750 because it should balance, right? Reduced here, reduce the cash. So it is an expense of, I think I will stop share, but you have it with you. Okay, I'll just look at here. 750, number 5. Paid 3,000 employer salaries in cash. So it's minus 3,000. This is, let's describe it as advertising. Minus 3,000 sorry, this is salaries. Earned travel commissions of 10,000, of which 2,000 was received in cash. So this is revenue. We would say 10,000. 2,000 was received in cash. So it does not equal plus 2 plus, plus 10 plus 2. There is a missing 8,000 here. Where would you put it? Can I insert it here? Receivable. Okay, so we will have, this is equipment 8,000. Also, we have receivable of 8,000. Okay, don't get confused. Let's just put it a little here, plus 8,000. So far, so good. Paid 5,000 of the 8,000 owed to the equipment supplier. So remember here, the one who gave us equipment, was that really 8,000, the equipment? Costing 8,000 was bought on credit. So there is a credit here of 8,000. We are going to pay 5,000 of that. So minus 5,000 and accounts payable minus 5,000. So we just owe 3,000. Number 9, use 100 of the office supplies. So there is the office supplies here of 500. You used 100 dollars amount. So basically they made an inventory and they say they used 100 of that. We're not counting each pencil, remember? So what will happen here is we will reduce the asset by 100, and there must be an equivalent minus 100 here, and that is supplies expense. We will recognize an expense and then charge 1,000 of miscellaneous expenses on the corporate credit card. The expenses on the corporate credit card. You charge, so basically charge is a payable. Okay, so you are going to pay Citibank. I'm just going to assume corporate credit card expense. There will be an expense of 1,000 here. This is miscellaneous. And then you did not use cash, you actually use your credit card. So this is plus 1,000. There is an additional payable to a bank who owns the credit card. Okay? How is that? I think you can see that. You can take a photo of that. I don't know if I can be proud to post it in YouTube, but we will. So what else are we supposed to do? So we did that analysis, explain how the transaction. So we did that as we went along. Prepare an income statement for the month. So that's a bit easy. Where are we going to put it? Actually, I think I can use that. Never mind. So this is the Acme. No, this is Bon Voyage Travel. Bon Voyage Travel. Income statement. For the month ended June 30. For the month ended June 30. Okay, let's start with, they call it commission. 10,000. And then let's do all of the expenses. Let's start with the highest one. Less expenses. Salaries. 3,000. Advertisements. Advertising. 750. Supplies expense. 100. Miscellaneous. Is that 1,000? Miscellaneous expenses. I should have used, I should have used 1,000 if it's by order of amount, but usually the miscellaneous is the last. And you might say, Dr. Avi, so many rules, it's just coming along. You get used to that. So total expenses is 4,850. And therefore net income would be 5,150. Okay, so we're done with that. We finish. Explain now why the change in the cash is not the same as the income. The change in cash, again, there's a lot of investment by the owner. That does not appear in the income statement. So they have a lot of cash, still a lot of cash compared to the net income of only 5,150. Again, we will take that up in the statement of cash flows. Okay.
Sure.
Yes, any question, Angelica?
Oh, for the income statement lang po of the Bon Voyage, should we also
Ay, mali
add
sa income statement.
the rent since it was prepaid in cash?
Sorry, I can't hear. Hold on. I have to.
Sorry.
Can you repeat that?
For the income statement of Bon Voyage, I was just asking if we also need to add the rent of 500.
Yes, I think I missed the rent. Where is the rent?
Number 2 po ata. Sorry.
No. It did
Sorry,
not say
number
yet.
4 po pala.
Okay, you are correct because it did not say yet that there is going to be. We will talk about it in the adjusting entries. This is pre-adjustment.
All right po. Thank you po.
So when we talk about we will talk about the entire accounting period. So basically, this is like pre-adjusting entries. Okay, so there, it only mentioned that they were able to get inventories of the supplies, 100 were spent, but we still, in the adjusting entries, we still have to come up with the depreciation for equipment, what is the bad debts for receivable, prepaid rent, what is the rent expense. So we will assume that that will come after. Thank you for the question. Anything else? Okay, so I think that's the last of this problem. Oh, that's not a quick one. So in 2-2, prepare a balance sheet as of June 30 for the Gregory Company using the following data. So the new things, I'll just tell you the new things that you are, let's just look into the accounts. Accounts payable is a liability. Accounts receivable is an asset. Accrued expenses, what do you think of that? It might seem like expenses already, but it is accrued, meaning it's still a payable. So it is a liability. Like if, for example, at the end of the month, I will accrue utilities expenses. I have not paid Meralco yet. Okay, so it is a liability to pay. So the thing is, if it's actual expenses already, electrical expenses, it will already appear as expenses. But the accrued gives you an idea that it is not yet paid. Accumulated depreciation on buildings, this will be less if there are buildings here. Buildings at cost, less accumulated depreciation, then the net amount you put for the total. Accumulated depreciation on the equipment, we have to look for the equipment here. Equipment at cost, 761,000. Bonds payable, this is the long-term bonds. Like if I invest in SSS, Social Security System, the bonds payable, I'll invest my money. No, actually, they invested on me. SSS is a creditor. Okay, so that's a liability on my part. And then capital stock, that is under equity. Cash is 89. Estimated tax liability, this will be like, it will come under the profit before tax, less estimated tax liability, 125,000. Inventories 513, investment. So this is an asset. You have an investment in another company. Land at cost, there is no depreciation for land. Land is not depreciated. Land, again, can increase in value. If South Mall will put up another mall near me here, then it can increase the value of the land here. Marketable securities, these are assets that, these are current assets. Notes payable is a liability. So how would you compute for the retained earnings? This is actually the balance of all of the asset, less liability, less capital stock, no? That is your balancing figure. Okay, any question as you did that assignment? And then 2-4, it says 2-4 and 2-5, right? 2-4 and 2-5. Okay, probably I'll discuss that. I can just do another outside the class time. I can do this using my computer, not using my bad handwriting there. Okay.
Yeah, I did raise my hand. I was gonna say that I think like the computations for assets and liabilities, it's rather straightforward for me, but I guess I'm still a bit scared that I know like this kind of computation, this concept is a bit more on the easier side of accounting, and I know it's probably gonna get a little harder harder from here on. So I'm just gonna mentally prepare for that. Thank you.
Thank you. So the accounts, there'll be much more. You will see that when you do the final paper, you will look into your selected company. You will see there's a lot more accounts. But the main idea is there's an asset, there are liabilities, there's owner's equity. The idea is really to get skilled, to know which are assets, which are liabilities and equity, which are revenues and expenses. So as you said, there'll be more. You will still see more in terms of income statement accounts. So it's a matter of really getting used, getting familiarized with the accounts. Good. So good luck in that. Anything else? What about the rest? Okay, is it harder? Is it easier right now for you?
For the rent in the journal at the back sa board po, kasi what we placed po is minus 500 for cash and then minus 500 for equity.
Where is that? Minus 500.
So,
What number was that?
number 2, the second line po.
Okay. If the answer that you got from the internet is they actually expensed it right away, that's all right. That's all right. Okay.
Oh, okay po.
It's
So
all
it's
right. I can
okay.
check it really for compliance. I will not really check it for the accuracy. How I assumed it is that it's as it says here. Did we tackle 2-2? Since we tackled that under the first chapter, the way that they say it kasi, but this is not going to be very strict. The way that they say it in the problem is the month's rent of 500 was prepaid in cash. So in principle, it's like a prepayment. A prepayment is an asset still. Later on, as we go into chapter 4, it's going to be like adjusting entry. Okay, what among the prepayments are now expensed? Okay, but if you actually put it under expense, that's all right. Okay,
Po. I have a
welcome.
follow-up question po.
Welcome. Okay, so thank you, Bella, for the missing ones. Okay, good. So let's call it a night.